Very good morning, everyone. A jazzy little tune there. I don't know whether anyone else could hear that. This is the Morning Blast on Wednesday, the 13th of August. The dwarf will hopefully be along momentarily to get things underway properly, but in the meantime, I might have to tell some jokes or something to kill a little bit of time. Um, Here he is. Ryan has arrived. Very good morning to you. Let me invite co-host. Here we are. Send co-host invite. We'll be along momentarily, I'm sure. Ryan Paisley, can you hear me?
Hello, hello, hello.
Here he is. Morning, Ryan. How
Yeah,
are we?
the Wolf signing in. How are you?
Oh, you heard that, bugger.
Yes, yeah, I did. Thank you very much. Yeah, I know. I was just walking outside of well, to be honest, I just put down my mimosa, so I can't really be too angry at you.
Bloody hell,
But
it's
anyway, yes,
half
as
past
Michael
nine
said,
where you are, isn't it?
yeah, it's 9:30. Yep, yep. But it's
God.
holiday time, and it's the same as airport time. It's always midnight somewhere. Um, but as Michael said, welcome to the morning blast. I'll get the legals out the way as usual. If you trade on anything or make any investment decisions based on what we say on this, go give your head a wobble. I speak for myself, Michael, and PIQ. Just don't do it. Don't be ridiculous. But yeah, how are you, my dear friend? How is London? Because it's
I'm
fucking hot
very well,
here.
mate. It is unbearably hot here. I think I've had probably about 3 hours worth of sleep the last couple of nights. So it's not,
Oh, hello. All right, all right.
not,
Mrs. Brown keeping you awake, is she?
no, nothing like that. Don't you worry. Uh,
Okay, right. Mr.
Purely
Brown
due
keeping
to
you
the
awake,
heat.
is he?
Oh no! Oh
Yeah,
God!
we're an inclusive show. But anyway, let's crack on.
Yeah, let's. I'm going to bring the music back in a second just to move things on. Right, where are we this morning? Well, stocks trading at fresh record highs. The S&P 500 and the Nasdaq 100 both advancing well over 1% yesterday, and both
Can't
notching
stop, won't
record
stop.
closes. Indeed, and that was after the US CPI figures that we had yesterday, which the market seemed to take as giving the Fed the green light to deliver a rate cut in September, but which I must admit I'm taking a much more sceptical view of. And to coin a phrase that Ryan has used many a time, I think it's very much a case of headline for show, core for dough when we look at the inflation numbers yesterday. What am I on about there?
I
Well,
tell you what, though, just before you do, I've never been prouder than when I saw you post that.
oh, honestly, it fucking pained me that you were the one that came up with that. You can imagine the grimace on my face.
I can, I can. Made my
uh,
day.
Anyway, what do I mean by that? Well, headline price pressures remained relatively contained. Headline CPI rising by 0.2% on a month-on-month basis in July, a downtick from the 0.3% that we saw in June, while headline on an annual basis rose by 2.7%, which was unchanged from the pace seen a month prior. The main reason for this, though, was due to a drag from energy prices. When you take out energy and, of course, food and look at the core metrics, on a month-on-month basis, core CPI rose by 0.3%, up from the 0.2% that we saw in the month of June. And on an annual basis, core CPI rose by 3.1%, up from a prior 2.9%, and the the fastest pace, I should say, since February. If you drill further into the report, there's also some relatively worrying details. Super core inflation, which is core services inflation, excluding housing costs. It's something quite technical, but something we know FOMC policymakers like to focus on. That rose by 3.2%, up from a prior 2.9%, and core goods inflation, that rose by 1.2% on a year-on-year basis, which is the fastest rate since June of 2023. For a bit of context on that, because the usual suspects were out yesterday saying, oh, it's only 1.2%, why are you worried? Well, 6 months ago, core goods prices were actually in outright deflation. So it's more a case of the direction of travel
Yeah.
here as opposed to the absolute level that we're seeing. So personally, I don't think there's anything in that inflation report that screams the Fed must deliver a rate
No.
cut now, and certainly not the 50 basis points that Treasury Secretary Scott
Oh,
Bessent was waffling about
really?
on television last night. Yeah,
Honestly?
sadly he was.
Oh, God.
And I think actually this report reinforces the view that we've heard from a lot of FOMC policymakers that the inflation side of things is further away from their goal than the
Yeah.
employment side of things. We've now had 53 months running of headline CPI being above the target.
I tell you, it's a great example of devil being in the detail. The further you dive into these numbers, the less,
Mm.
you know, well, the further away you get from what the impression from the headline is. And
Yeah,
again, and that's exactly what you were saying. And I think this is why, is it important for, what you say, what, the short term, fast money? Probably not, because, they just say, oh, look, headlines this lump in for risk on. But, if you are making longer winded, investment decisions over longer time frames, and it is definitely things you should be taking into consideration. Because, for instance, you may be looking to fade the Fed funds rates on this move, on the back of these CPIs, because that, hang on a second, once people do start digging in, once real money gets their teeth
mm.
into the data, and as we see, me and you have posted many times over the years the difference between fast money and real money.
Yeah.
That initial move, maybe not so much in stocks, because the path of least resistance is definitely higher in stocks. Any chance to go higher, they will, and you need sustained and increasingly negative news
Mm.
to even keep them flat, let alone make them come off. So I think this is definitely for people newer to markets. I think it's a great example of that, differentiating yourself between the short term fast money and the longer term real money moves.
Yeah, and to be fair, we did actually see that in the Treasury complex yesterday. We had a big rally across the curve. 10 and 30-year
Yeah,
yields were
on the
down by
headline.
about 5 basis points or so on the headline, as you say, and then within about three-quarters of an hour to an hour, 10 and 30-year yields were back
Yeah.
slightly above their pre-release levels. So
Oh,
again, it's
wait.
that sort of as
I,
the data is
I
digested,
Yeah, apologies. Obviously, I wasn't. I think I was about 8 mimosas deep at that point, so I wasn't looking at the market. But no, but that's a
buying a
prime. Yeah, mine. Tempered. Yeah, no. Now you say it like that, it's a perfect example of the difference between real money and fast money. So
yeah.
yeah, one to keep an eye on.
Absolutely, and I think looking ahead, we'll move on from CPI momentarily. But I think we're in a spot where it's actually quite tricky now for the Fed, because obviously the next sort of big event on the monetary policy side of things is the Jackson Hole Symposium. We're going to hear from Fed Chair Powell next Friday, I would imagine.
Everyone
Um,
remembers their first Jackson Hole.
yeah, well, God. And there's really two things that Jay Powell can do at this point. He can either really try and, I don't even want to say the word because you're going to laugh now, but he can either try and push back on market
Hey,
pricing,
everyone loves a good
which,
pushback story.
given the data, you say that's the right thing to be doing. The labour market isn't
Yeah, yeah,
crying
yeah, yeah.
out for a rate cut and inflation is moving in the wrong direction. Markets see September as a certainty. Powell probably should be massaging expectations
Oi, oi.
lower a little bit. But if he does that, you run the risk of causing a pretty huge tantrum, certainly in the equity
Yeah,
complex. On the other hand, Jay Powell could kind of take the easy option, which is to basically say, we sort of endorse market pricing, but not saying that in as many words, of course. But if you do that, then you may as well just kiss goodbye to any sort of pretense that you're aiming for 2% inflation. So
yeah.
I know he's paid the big bucks and he's done a bloody good job so far, but I would not want to be in Jay Powell's shoes next Friday, I don't think.
Well, I don't think I could fit in them.
Oh, God. Right, moving very swiftly on from that. Speaking of Jay Powell, of course, in the aftermath of that inflation report, we heard from President Trump, who said, and I quote, Jerome, too late, Powell must now lower the rate, and that he is considering allowing a major lawsuit against Powell as a result of the Fed's building renovations. I mean, this is just complete cobblers, to be completely honest with you. What I would say, though, is that, and I think we made this point recently on one of these calls, is that we are within weeks of Powell's successor being named. I would be
Yeah.
very surprised if that wasn't done within the next sort of 8 to 10 weeks by the end of October. A legal case against Powell would take years, if not a decade, to sort out, by which point his term as chair is going to be over anyway. There just doesn't seem to be any upside in Trump actually
I got a
pursuing
question
this. I
for
think
you.
it's just complete noise. Go on.
I got a question for you. When Trump names Powell's successor, how binding is that naming? I mean, because we know what and we've seen before. He could name someone, and in
Hmm.
the time between being named and him getting actually stepping into the role of governor, um, there's a chance that Trump could fall out with the guy. So,
Yeah.
is there any do we know if there's any kind of binding agreement when it's named, or is it kind of like this is who I think for now?
Yeah, so I think there's probably three. I'll preface this by saying I'm not a US legal scholar, so don't take
Also,
this as
this wasn't a
gospel.
bad question for me, considering.
It's a very, very good question, actually. So I
Oh,
think
stop it!
there's three sort of phases of this process, actually four phases that you need to kind of think
There's a
about.
quiz at the end, everyone. There's a quiz at the end.
Phase one is where we are now, where we've just got basically names being drawn out of a
Yeah.
hat and thrown into the media. Obviously, at this point, Trump can basically do what he wants. He can
Yeah, right.
interview whoever he wants.
Ronald
You know,
McDonald.
he could call you and I into the White House for a chat if he really wanted to. He's got complete freedom. Then we move into the phase where the whoever is chosen is formally nominated to the role, because it has to pass through the Senate, has to go through the Senate Banking Committee, and then it has to go to where they will have various hearings, and then it has to go to a full vote on the Senate floor. During that process, we are at that stage down to one name who is being effectively interrogated and interviewed by lawmakers for the job. But that nomination could be pulled. It could be revoked and Trump could nominate someone else pretty much at any time during that process.
Right.
And we have
Right.
seen, not with the Fed chair, but we have seen Trump do that with
Yeah.
certainly other Fed governor roles. You think about someone like Judy Shelton or Stephen Moore back in the
Yeah.
day. The grey area, and there may well be an answer to this. If someone does know, please tell us, because I'm not entirely sure. I believe that the grey area comes between that person getting confirmed by the Senate and them actually taking up their job. Because the
Right.
Senate will
Okay.
likely have that confirmation at some point towards the back end of this year, probably before Christmas. They will not take over as chair until May. So the problem could
Right.
come, and again, there may be a precedent for this, I'm not 100% sure, but if, let's say, we get to February and the bloke Trump's picked for Fed chair suddenly says, oh no, I'm a massive hawk, I'm going to hike 300 basis points in my
See you
first
later.
meeting, and Trump goes, what the fuck have I done? I don't want you anymore. I don't know how or indeed if Trump could actually change the nomination at that point. And then obviously once, phase four, once they take the job, once they are Fed chair, we know that the president can't then dismiss them unless it's
Yes.
for cause.
Yeah.
So I think the question marks are over that kind of flux
Right. Yeah.
period between confirmed by the Senate and actually sitting down in the Eccles building and getting on with the job.
And unfortunately, that is precisely the part of this journey where markets will react the most severe if anything does come awry.
Yes, absolutely. So yeah, that's definitely a risk, given how rapidly and how often Trump tends to change his mind on things. I might go and do, given how empty the calendar is today, I might go and do a bit of digging onto that one now.
Well, look, I'm glad I prompted some discussion and getting your grey matter going.
Well, there's not much of it left, I think, at this point.
Oh, no, I said grey matter, not hair.
Oh, right, I see. Right, rapidly moving on from that, but sticking on a similar vein of this sort of erosion of economic independence and orthodoxy, we had some comments from E.J. Anthony yesterday, a name who is suddenly familiar with everyone. He's the chap that Trump wants to run the BLS. Fox News were running some remarks from him. Now, I'll preface this by saying that Anthony did make these remarks before he was nominated to run the BLS, but nonetheless, he suggested in this interview that the BLS should suspend the publication of the monthly jobs report, instead saying that they should just publish quarterly stats until they resolve data issues. This is what I would call the Chinese solution, where you start getting data that you don't like, so you just go, fuck it, we're not going to publish it at all, which is one option. Not exactly an orthodox or a wise option, but, this is the chap who's coming in. So
the thing is, right, so yeah, the optics, exactly what you said, that's exactly what it looks like. However, I think if they would have said this when the data was going well and the employment was on the up and et cetera, I wouldn't be against it.
no, I wouldn't either.
When you're having we're having huge revisions on a monthly basis, and then you're having revisions to the tune of millions on annual basis. Something is clearly shitty with the data, and we won't go down we won't go down the lane of me saying maybe ADP is actually the one we should be looking at, because I don't want to ruffle any feathers. But you know what I mean? If he said this on a day when the data's good, I think you would get a lot of support for it. But because he's saying it when the data's going against him, of course the optics look like, oh, hang on, this is China removing youth unemployment data springs to mind. You remember when that number disappeared when it reached 40%?
Yeah, exactly. I think the other thing is that the problem they've got in the US is that it's become political, because you've got to remember, of course, here in the UK, I mean, the ONS have stopped and started publication of various stats numerous times over the
Yeah.
last few years, and we still don't have PPI numbers, for instance, and certain segments of the labour force survey still aren't being published. The difference there is it's not the president or the prime minister coming out and saying this data's rigged. It's the ONS coming out and saying
Saying
we're
this data's
independent and we've
shit.
fucked up, so let's just stop until we get this right. If it was a sort of carbon copy of that situation, then I'm completely with you. You could sort of justify
Yeah.
that much more easily.
I mean, you'll still get the people coming out and saying this is politically motivated. Of course, you're not going to get away from that. But I just genuinely think that there is a case to be made for, look, let's get our fucking house in order.
Yeah.
What the data we're putting out at the moment isn't really, at least the headline data isn't worth
Mhm.
the paper it's printed on.
No, I fully agree with you on that one. So anyway, we'll see what happens there. A few other bits and bobs from yesterday, just before I hand over to you, Ryan. We had some disappointing sentiment data out of Germany, the ZEW expectations and current situations metrics, both coming in below expectations and declining on a month-on-month basis in August. On the trade front, it was a relatively subdued day in terms of headlines, although we did have news from the CBP that customs duties have hit a monthly record of $28 billion for July.
Well done, everyone.
Well, I was going to say that doesn't make a dent in your $1 trillion deficit, but there we go. If you compare that to import volumes, which is kind of a crude way of working out the effective tariff, that comes to about 10.5%. So quite some way off the levels that we were fearing it might reach.
Yeah.
In terms of other bits and bobs from yesterday, we heard from a few Fed officials. Fed's Barren, who is a 2027 voter, saying that the policy is well positioned and that the balance of risks to the dual mandate is currently unclear. We also heard from 2026 voter Schmid. He was saying that growth remains solid, inflation is too high, and restrictive policy is appropriate for the time being. Clearly, neither of those particularly on board with the idea of a September rate cut. We also heard from Steve Moran, who is, of course, Trump's nominee to take over from Governor Kugler. He was saying that he is not able to comment on current rate policy, probably the first time this bloke has stuck to an economic convention in his life. But he also said on CNBC that there is no evidence of tariff-induced inflation. So clearly the CPI numbers yesterday passed him by. A few other bits and bobs from yesterday in the AI space. Perplexity, they have made an offer for Chrome. They want to buy that. Chrome is, of course, the web browser that Google have. They want to buy that for $34.5 billion. There's various legal issues that Alphabet are currently dealing with, and whether they've got a monopoly in that space and whether they've been manipulating search results. So potentially one to watch there. India, they are set to resume direct flights for India and China as soon as next month. This comes as diplomatic relations and tensions thaw and relations between the two countries improve. For context, they suspended flights after just before COVID and have never resumed them. So it could be one to keep on the radar. Pony AI, they reported earnings yesterday, delivering a beat on revenue and profit. Indeed, the stock galloped higher yesterday.
Whip
Trading
that
about
nag, you slag.
trading up by about 5% by the close. And last but by no means least, Sky News here in the UK reporting that the government is lining up an administrator for Thames Water if they are unable to find funding of their own. Of course, they have been going down the plug hole for quite some time now. And it seems that news of their potential insolvency has started to leak out.
Oh, God. Well, double bubble. Thank you for that, Michael. Michael, thank you for that. As always, do follow Michael, do follow Pepperstone, etc., etc. I'll read out some of the select overnight news headlines via our dear friend Zach. There's no Substack this week because, quite frankly, I can't be asked to put it together, and I'm normally four mimosas deep by this time every morning so far. But do follow Zach because he posts it on Twitter, and he's just a top lad. And contrary to popular belief, he is actually very knowledgeable when it comes to markets.
He is actually, yeah.
Much love to you, Zach. So start off with trade. US trade.
But he's not
officials
here, so we can stop that.
Oh, is he not?
Yeah. No.
What a mug the geezer. US trade officials will meet again with their Chinese counterparts within the next 2 to 3 months no rush, guys, to discuss the future of the economic relationship between the two countries. That's according to Treasury Secretary Besant. Besant said the US will need to, quote, to see, quote, months, if not quarters, if not a year, unquote, of progress on fentanyl flows before it considers reducing tariffs. This has got 90% done written all over it.
It really does, doesn't it?
The trade, mate, flashbacks. The trade conflict between China and Canada escalated after Chinese authorities said they intend to impose a hefty tariff of about 76% on shipments of canola. That's obviously the agricultural commodity. A move Canadian farmers say would shut them out from the world's second largest economy. In macro news, the Trump administration is considering changes to how the federal government collects and reports jobs data, as me and Michael were just going on about earlier. I personally don't think it's a bad idea, but I think the timing looks shitty. Nomura, they expect the Fed to cut rates by 25 basis points in September, obviously not driven through the details as Michael has, bringing forward its easing forecast amid signs of milder US inflation in July and early cracks in the labour market. China's fresh consumer subsidy program could spur several trillion yuan in new loans to boost spending. That's according to analysts at Chinese banks. Some bondholders of Road King Infrastructure have not received their payment for a coupon totaling $11.3 million after a